Coming up, retail sales are down, so are shoppers just really waiting for bargains? And the Australian dollar at a 4-month high against the US. The details next. It is your daily 10-minute business and finance news wrap for this Tuesday, the 28th of November 2023. On market day, we'll speak with Angus Geddes from Fat Profits to talk about the strengthening Australian dollar. But first, to retail sales, which according to the Bureau of Statistics fell 0.2% in October. That's even as the RBA governor said today at a panel in Hong Kong that household and businesses are in pretty good shape. So are consumers becoming more cautious, or are they just simply waiting for bargains? I spoke with Stephen Wu, economist at the Commonwealth Bank, for more. Stephen, these retail sales numbers down for the month of October, is it really just a pullback so that consumers can spend up big during the Black Friday sales, which obviously aren't counted in this latest set of data, or is it the start of something else?
Yeah, hi, Ricardo. So it's a good question. Firstly, it's useful to know, I think, about what the usual seasonal patterns are. So typically the last few years, what we have seen is a small increase in the month of October and bigger increases in November. This year, obviously, we did see that decline of 0.2% in the month of October. And the ABS has flagged in their release as well that consumers were spending a bit less on discretionary items in anticipation of the Black Friday sales event. So we think there's a part of it that's a reflection of people looking ahead and thinking through all those sales events occurring in November, but also the fact as well that we are seeing some pockets of weakness beginning to emerge in parts of the retail trade components, suggests to us that we are seeing a further slowdown in consumer spending.
Before I ask you more about the state of the consumer, do you have any indication yet of just how successful the recent Black Friday and Cyber Monday sales have been?
Yeah, so we do get on a weekly basis our internal CBA credit and debit card spending data. Now, our most recent data includes spending up to midnight of last Friday, so captures the Black Friday, but not the Cyber Monday and the weekend of that period. What we can see from that data is that spending patterns were broadly similar to previous years. So we did see a big pickup over that week, spending on things like clothing and footwear, household goods, and just general retail. So certainly we are seeing the spending picking up in the Black Friday sales events.
So how would you describe the consumer then? I know Michelle Bullock just spoke a couple of hours ago in Hong Kong. One of her headlines was just that the households and businesses are still relatively resilient, right? But based on what you're seeing in terms of consumer spending, these latest numbers on retail sales, how would you describe the consumer?
Yeah, it's a little bit tricky recently to figure out how the consumer is faring because there's a lot of seasonal patterns in this data as we go into year end. So we might see this strength in spending over Black Friday just be a pull forward of spending that would have occurred in Christmas usually. So it's a bit early days, hard to know for sure. But what I would sort of focus on is the fact that retail trade is up just 1.2% over the past year. Now, you factor in population growth, which is almost 3%, factoring in inflation as well, which is around 5%. We're really seeing weakness come through in the consumer side. It's just being masked by inflation and also by population growth.
So any implications for interest rates?
I think the RBA's focus right now is clearly just on inflation. So the spending data is one aspect of what they're looking at, but they're looking more closely at the inflation data. So I think the more policy relevant data list is going to be tomorrow's October monthly CPI indicator. We do think we'll see a decline in the annual pace of inflation, but we think the RBA will be looking more closely at the full quarterly figures that are due out in January of next year before they look to sort of tweak policy, if at all, based on those figures.
Stephen Wu there, economist at the Commonwealth Bank.
Now, Market Day. on the SBS On The Money podcast.
A decent day on the Australian share market today, which rose 0.4% on the S&P ASX 200, 7,015. For more, I spoke with Angus Geddes, the CEO at Fat Profits.
Had a fairly a good run in the resources sector today. The gold sector's been running a bit of a bounce in some of those commodities, so that's certainly helped the market. But it's been quite a good run across the board, really. We've seen the banks, a lot of the industrials are all firmer. Good profit result from Collins Foods.
Can we focus on the Australian dollar for a bit? It really has mustered up some strength in recent times, now above 66 US and a near 4-month high. The question is, though, is it a story about the Australian dollar's strength or US dollar weakness? Why and what's causing it?
I think it's a story about interest rate differentials. And in Australia, given where inflation is, the RBA are going to have to keep interest rates higher for longer to rein in that inflation problem that we have. Whereas in the United States, I think the markets are looking forward to interest rate cuts as early as the middle of next year. So that will narrow the interest rate differentials between Australia and the United States, and that will have a supporting boost to the which providing a supporting boost to the Australian dollar.
What happens when you add commodities, especially the iron ore price, into that equation? Because we've seen iron ore prices rise, but sentiment out of China isn't necessarily so strong at the moment. So what's your take?
Look, sentiment is not great, but Beijing are pulling a lot of levers to try and stabilise the economy. We haven't seen the iron ore price fall over. The oil and gas price hasn't exactly collapsed. Base metal prices are still, reasonably elevated and quite well supported. So, this is all supportive, I think, for the Australian dollar. I think the gold price, getting up to near record highs is also helping, given that's also one of our top three commodity exports.
And finally, this is likely to be the last time I speak to you this year. Where do you see the opportunities right now for investors?
Well, I think the big opportunity next year is going to be in a weaker US dollar, which I think will be supportive for precious metals. And, looking for decent upside moves in gold, silver, and of course, a lot of those precious metal miners into next year.
Angus Geddes there, CEO at Fat Profits. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.